All right, so you sent us a whole mountain of documents on Den Networks, investor presentations, financial statements. Looks like you're really trying to get a handle on their Q3 performance for fiscal year 2025. And, we're here to help cut through all the noise and really zero in on some insights.
Yeah, we'll break it all down. No jargon.
Exactly.
Just the key takeaways to help you understand where they stand and what it might mean for their future.
Exactly. To set the stage quickly, Den Networks is a leading cable TV and broadband provider in India. Presence in over 450 cities and towns across 13 states.
Big footprint.
Yeah, they're a pretty big deal. Now let's dive into these financials. One thing that jumps out at me is Den's cash position. They're reporting zero gross debt and a whopping 3,089 crores in cash.
Yeah, that's remarkable. Remarkable position to be in. I mean, think of it like this, that cash isn't just sitting idle. It gives Den incredible flexibility. They can use it to invest aggressively in expanding their broadband network, maybe even acquiring smaller competitors. Or if the economic winds shift, they've got a huge cushion to weather any storms.
So a healthy cash reserve is definitely a point in their favor. Let's look at their revenue. For Q3, their total revenue came in at 261 crores, down slightly year over year, but up compared to the previous quarter. Any thoughts on this? Anything to be concerned about?
It's something to keep an eye on for sure. That year-over-year dip does suggest there might be some headwinds. I mean, it's too early to sound the alarm, but we need to understand what's driving that trend. Is it industry-specific, or are there company-specific factors at play?
Yeah. And to understand that, I guess we need to kind of dig a little deeper into how that revenue breaks down. We see that subscription revenue is actually down, while placement and marketing income has increased. Now, for our listener who might not be familiar with this, placement and marketing income essentially comes from things like advertising and channel placement fees. So it's a different revenue stream than traditional cable subscriptions.
Right, and this shift in revenue mix, it raises some interesting questions. Could this be a deliberate strategy by Den? Are they intentionally shifting their focus away from traditional cable subscriptions and towards these other revenue sources? And if so, is it a sustainable strategy in the long run?
It's interesting because the materials you've provided offer a few potential explanations for this shift. One is the overall industry trend impacting cable subscriptions.
Yeah, I mean, you can't ignore the elephant in the room, which is cord cutting. It's a global phenomenon. Consumers are increasingly opting for streaming services over traditional cable TV. This trend is putting immense pressure on cable providers like Den. It's forcing them to explore new avenues for growth.
And speaking of growth, another factor to consider is Den's wholly owned subsidiary, Den Broadband Ltd. They're a key part of the story, but reported as a separate segment in the financials. Is there anything in these documents that gives us a sense of how their broadband business is performing? And could that be contributing to this shift in revenue streams?
That's a crucial question. Broadband is a major growth area in India, and Den's performance in this segment could be a leading indicator of their future success. We should definitely delve into those broadband numbers a bit later. But before we do that, I think it's important to look at the bigger picture of their overall profitability. Their paid profit after tax stands at 42 crores for the quarter. It's a decent figure, but it's down compared to both the previous quarter and the same quarter last year.
Now, this decline in PAYP, coupled with that dip in revenue we talked about earlier, does raise some concerns. Should investors be worried?
It's definitely something to monitor closely. But before jumping to conclusions, we need to consider the context. How does this compare to their industry peers? Are there any specific market events or economic factors that might be impacting these numbers?
And here's where things get a little more nuanced. If we look at Den's standalone financials, which for our listener represent only the performance of the parent company, they're actually showing a higher profit compared to the consolidated financials, which include all of their subsidiaries like Den Broadband Ltd. So how do we reconcile that?
It's important to understand that the consolidated figures paint a more comprehensive picture of Den's overall performance, encompassing both the wins and losses from all their subsidiaries. In this case, it seems like the performance of Den Broadband Ltd. Might be dragging down the consolidated profits somewhat.
And of course, no financial review would be complete without mentioning the audit report. Happy to report that the auditors have given Den a clean bill of health. No accounting red flags here, so that's definitely reassuring.
Absolutely. A clean audit report adds a layer of confidence to these numbers, making them more reliable for our analysis.
So we've laid the groundwork with the big picture financials. Now let's dig deeper into the specific drivers of Den's performance, starting with that intriguing shift in revenue streams. What else can we glean from these documents about why subscriptions are down and placement marketing income is up? Is this just a blip, or is it a sign of things to come?
Well, the decline in subscriptions could be more than just a blip, yeah.
Ah,
It might be a sign of a larger trend with traditional cable TV gradually losing ground to, you know, all the digital alternatives.
okay, so it seems like Den is navigating a bit of a tightrope walk here, balancing these traditional revenue streams with new avenues for growth. And that's where their emphasis on digital transformation comes in. This phrase pops up several times in their investor presentation. But what does that actually mean for Den? What are they doing to adapt to this digital shift?
Right. That's the key question. Digital transformation can be a bit of a buzzword. So it's important to look beyond the hype and see what concrete steps Den is taking. Are they investing in the right technologies? Are they making their services easily accessible online? Are they creating a seamless digital experience for their customers? These are the things that will determine whether their digital transformation is just talk or if it's truly driving results.
So it's not just about throwing money at technology, it's about using it strategically to enhance their offerings and meet evolving consumer demands. And speaking of competition, Den's not operating in a vacuum. They're facing pressure not just from global streaming giants like Netflix and Amazon, but also from homegrown Indian streaming services. What does this competitive landscape look like, and how is Den positioning itself to stand out?
It's a crowded marketplace, that's for sure. Den is going head-to-head with some formidable opponents, both international and domestic. To succeed, they need to find ways to differentiate themselves. What unique value proposition can they offer that their competitors can't?
Well, one potential advantage they have is their broadband business. As we mentioned earlier, broadband is a booming sector in India, and Den already has an established network infrastructure in many parts of the country. Could this be their key to staying competitive?
Absolutely. Their broadband business could be a game changer. If they can offer competitive broadband packages, perhaps bundled with their cable TV services, or even as standalone offerings, that could be a major differentiator. It's all about giving customers options and convenience.
And it's not just about infrastructure, it's about the quality of service and customer experience they provide. Are they investing in things like faster internet speeds, reliable connectivity, and excellent customer support? These factors will be crucial in attracting and retaining customers in this competitive landscape.
We're spot on. It's about more than just the pipes and wires. It's about the entire customer journey. And one thing that caught my eye in these documents is Den's focus on partnerships. They've announced collaborations with content providers, technology companies, and even other cable operators. This suggests they're not trying to go it alone. They're recognizing the value of collaboration and building ecosystems to expand their reach and enhance their offerings.
Yeah, partnerships can be a powerful growth strategy, especially in a rapidly evolving industry like this. It's about leveraging each other's strengths and creating win-win situations. But beyond partnerships, what else can we glean from these documents about Den's long-term strategy? What's their vision for the future?
One thing that stands out is their emphasis on catering to a wider range of customer needs. They're not just a cable TV company anymore. They're positioning themselves as a comprehensive provider of digital entertainment and connectivity solutions.
So, they're diversifying their portfolio, recognizing that the future of entertainment is multifaceted. It's not just about TV, it's about broadband, streaming, and potentially even other digital services. But with all these moving parts, how can investors get a handle on whether Den is actually executing effectively on their strategy? What should they be looking for?
Yeah, here's where we need to look beyond the financials and delve into those qualitative aspects. Investors should be asking, is Den's management team adaptable and forward-thinking? Are they making sound investments in technology and infrastructure? Are they attracting and retaining top talent? These are the things that will ultimately determine their long-term success.
So it's about assessing not just their financial performance, but also their leadership, their vision, and their ability to execute their plans effectively. It's about understanding the people behind the numbers. Now, you mentioned earlier that we should take a closer look at Den's broadband numbers. What can we learn from these documents about the performance of Den Broadband Limited?
Let's dive into those broadband figures. One thing that jumps out is that Den Broadband Limited is consistently growing its subscriber base. This growth is particularly impressive given the intense competition in the broadband market.
That's definitely a positive sign. It suggests they're gaining traction in a key growth area. But is that growth translating into profitability? Are they making money from their broadband operations?
That's the crucial question. While the financials show that Den Broadband Limited is generating revenue, its profit margins are still relatively thin. This isn't necessarily a red flag, especially for a rapidly growing business. It often takes time to scale up and achieve profitability.
So it's a balancing act. They need to grow their subscriber base while also keeping a close eye on their costs and ensuring that their broadband operations are sustainable in the long run.
Exactly. And this raises another important point about Den's overall financial strategy. They've been incredibly prudent with their debt, maintaining a zero debt position. This gives them a significant advantage in a market where many of their competitors are heavily leveraged.
That's a great point. Their low debt burden gives them more flexibility to invest in growth opportunities, weather economic downturns, and even make strategic acquisitions if the opportunity arises. It's a sign of financial discipline and strategic foresight.
Absolutely. And this brings us to another crucial aspect of Den's story, the regulatory landscape. India's telecom and broadcasting sectors are constantly evolving with new regulations and policies being introduced frequently. How is Den navigating this complex regulatory environment? Are they staying ahead of the curve or are they lagging behind?
That's a critical question, and it's one that investors should be paying close attention to. Regulatory changes can have a significant impact on a company's operations and profitability, so Den needs to be agile and adaptable to stay ahead of the game.
Precisely. And that brings us back to the importance of leadership. Den's management team needs to be savvy, not just in terms of business strategy, but also in terms of navigating the regulatory landscape and anticipating potential challenges.
So we've got a lot to consider here. We've got strong financials, a growing broadband business, a focus on digital transformation, and a prudent approach to debt. But we also have a highly competitive market, a rapidly evolving regulatory landscape, and some lingering questions about Den's long-term strategy.
It's a complex picture, and there are no easy answers. But by carefully examining these documents and asking the right questions, we can start to piece together a more comprehensive understanding of Den's current position and its potential for future success.
And one thing that's clear is that Den's story is far from over. There are still many chapters to be written. So what should our listener be paying attention to as this story unfolds? What are the key things to watch for?
Well, I think it's crucial to keep an eye on how effectively Den is executing its digital transformation strategy. Are they seeing tangible results from their investments in technology and infrastructure? Are they creating a seamless digital experience for their customers?
Those are great points. It's not enough to just talk about digital transformation. We need to see concrete evidence that it's driving growth and enhancing their offerings. What else should our listener be monitoring?
Another key area to watch is their broadband business. Can they maintain their impressive subscriber growth while also improving their profit margins? Will they be able to effectively bundle their broadband services with their cable TV offerings or create compelling standalone broadband packages?
And of course, we can't forget about the competitive landscape. How will Den continue to differentiate itself in a market crowded with streaming services and broadband providers? Will their partnerships prove to be a strategic advantage?
Absolutely. And on top of all that, we need to keep a close eye on the regulatory environment. Will Den be able to navigate potential changes in regulations and policies without significant disruption to their operations?
So, there are a lot of moving pieces here, and it will be fascinating to see how it all plays out. But one thing is for sure, Den Networks is a company at a crossroads. They have the potential to be a major player in the future of entertainment and connectivity in India, but they'll need to execute their strategy flawlessly and adapt quickly to emerging challenges.
Yeah, I couldn't have said it better myself. It's a dynamic and exciting time for Den Networks, and their story is one worth following closely.
All right, so we've covered a lot of ground here, but there's one more intriguing detail from the source material that we need to explore, and it's something that might make you rethink how you view Den Networks entirely. You mentioned that one of the questions we received specifically asked about comparing Den to its competitors.
Yeah, that's right. And this is where things get really interesting, because it forces us to broaden our perspective a little bit.
Yeah, it's like we've been focusing on this one tree and now we're pulling back to see the whole forest. So who are Den's main rivals and how do they stack up?
Well, without doing a deep dive into each competitor's financials, it's tough to, make a direct apple-to-apples comparison. But what we can do is talk about the competitive pressures that Den is likely facing in this market.
Okay, so let's paint that picture. We've already talked about the impact of streaming services, both global players like Netflix and Amazon and homegrown Indian services. That's got to be a major challenge for Den, right?
Absolutely. The streaming landscape is incredibly competitive, with new players emerging all the time. Den has to find a way to either compete head-on with these streaming giants or find a way to collaborate with them.
And it's not just about content, it's also about technology and the user experience. These streaming services are constantly innovating and raising the bar for what consumers expect. Den has to keep pace with those advancements or risk falling behind.
Exactly. And let's not forget about the broadband market. That's another area where Den faces fierce competition. There are numerous players vying for market share, each offering different packages, speeds, and pricing. Den needs to make sure its broadband offerings are competitive and appealing to consumers.
So Den's caught in a bit of a pincer movement, facing pressure from both the streaming and the broadband markets. But they do have some advantages, right?
Of course. Their established network infrastructure is a valuable asset, especially in a country like India where broadband penetration is still relatively low. This gives them a head start in expanding their reach and connecting more customers.
And their focus on partnerships could also be a key differentiator. By collaborating with other companies, they can gain access to new technologies, content, and expertise. This allows them to offer a wider range of services and stay ahead of the curve.
Precisely. It's about recognizing that they don't have to do everything themselves. Collaboration can be a powerful tool for growth and innovation.
So Den's story is one of both challenges and opportunities. They're facing disruption from multiple fronts, but they also have some unique strengths and are making strategic moves to adapt to this changing landscape.
And that's what makes their story so compelling. It's a reminder that even established companies can't afford to stand still. They need to be constantly evolving and innovating to stay relevant.
So to wrap this all up, what's the key takeaway for our listener? What should they be thinking about as they continue to explore NEN networks?
Well, I'd say the biggest takeaway is that Den is at a pivotal moment in its journey. They have a solid foundation, but they also face significant challenges. The decisions they make in the coming months and years will determine whether they thrive or simply survive in this dynamic and ever-changing market.
So it's a story that's still being written, and the ending is far from certain. We encourage you to, keep an eye on Den Networks, do your own research, and draw your own conclusions.
And as always, remember that investing is about more than just numbers. It's about understanding the companies, the industries, and the people behind them. It's about asking the right questions and never stopping learning.
That's it for our deep dive into Den Networks. We hope you found it insightful and engaging. Until next time, keep learning, keep questioning, and keep diving deep.